Good morning, good afternoon, and good evening to everybody on the phone, and thank you for joining Bramasol's ongoing series of webinars focusing on the Office of the CFO and Finance Transformation. My name is John Froelich, and today we have Julio Dalla Costa and Sara Thompson joining us to talk about cash management centralization, challenges, risks, and benefits. Julio, next slide. So as always, just some housekeeping items. As you know, this webinar is being recorded. You can ask questions throughout the webinar session. Use the little pane down here on the right. And of course, you can download our previous webinars, our great webinar on Tuesday about the future of finance and finance automation, or any of our series on Treasury. Next slide. And again, where can you do that? Come on down to bramasol.com. I think you need to do the builds here. So come to bramasol.com. You can check it out in our resource center. We have a lot of great material there for you, both the webinars as well as ebooks. And we'll have a great new ebook coming up for you on IFRS 9. Or down here, you can scroll to the bottom of the page and check out all of the different webinars that are available to you. Next page. Julio, next page, please. There you go. And then contact us at bramasol.com. Again, you can come up here, schedule demos. Also, we'll be having some opportunity for you to schedule time with us at Sapphire to talk about Treasury, as well as having more experts in the booth. So check that out. Join us at Facebook for the conversations around different Treasury and Treasury management topics, or join us on LinkedIn. So go ahead. All right, so I'm going to go ahead. We have our agenda, so I'll turn that over to Julio and Sara. So guys, take it away.
Hi, John. Thank you very much. Welcome everybody to our webinar series. We're going to jump right into our agenda today. Our agenda today, we're going to give you an overview of the Treasury function. As you recall, we had our last Treasury where we gave an overview of the entire function. Today, we're actually going to do a deep dive into one of those areas, which is cash management. We're going to talk a little bit about the objectives of cash management, definitions, and then we're going to have Sara do a cash management demo out of SAP. After the demo, we're going to talk about some of the benefits of why should you try to centralize your accounts payable function. Then we're going to talk a little bit about cash application. The cash application topic actually is a carryover from our topic on Tuesday, but it all interacts nicely into the whole cash management process. Then we're very fortunate enough that Sara will give us another demo on SAP's Bank Reconciliation tool, which will help us actually reconcile our bank statements to the bank GL automatically even. And then John is going to take us home with our summary and wrap up. Does that sound good, John?
Sounds great, Julio. And I know these are great topics because you and I were at a number of different venues, including SAP Centric and SAP Insider, and these are the two main topics we talked about. So should be great.
Yes, sir. So let's just take an overview. So the last time we spoke about the Treasury function, let's just give a quick recap on, what does the Treasury function look like from a high-level perspective. Obviously, the first one is you want to make sure that the right amount of cash is in the right accounts on a daily basis, which is really about your day-to-day cash management. It's ensuring that you have the funds available to meet your business operation needs. Simple things such as paying your vendors, payroll for employees, very, very critical. That's why we like to call Treasury the blood of the organization. It enthralls every part of the organization and is one of the most critical components of any company's vision strategy. Obviously, the overview you're taking in talking about working with senior management. So it's all well and good to have the right amount of cash in the right hands, but what is the strategy? What is the overall company strategy from making your Treasury function work for you, as John likes to say? So what is your optimal debt to total capital? Are we doing the right investments? Are we hedging? Are we doing the right commodity risk management tools? All these things, especially coming down to the third one, is you have a lot of macroeconomic factors, interest rates, foreign currency, commodity risk. What is the business function of actually managing all those risks? Those risks can be very volatile at times, as we see in today's macroeconomic society. And how a company manages those three components is a critical part of the treasury management function. And obviously, all this happens in the way of working through a bank or banking relationships. How do we leverage our expertise? How do we work with our banks as to the optimal bank accounts, the optimal bank to treasury ratio? All these things are very, very important. So if you look at this nice little graphic we have here, we have the company in the middle. Around the company are some of the challenges that we just spoke about in a little bit, which is, what's the funding strategy? Are we going to raise more money on a public market? Are we going to borrow debt? What type of debt? As you move to the circle to the right side, you have short-term investments. Do you have long-term investments? Are we going to hold treasury? Are we going to use, what types of investments are we as a company going to use? That takes us right into our cash management. So as we see there, how you manage your cash can definitely impact, your failure to effectively manage cash and investments. If you're not able to meet your demands on a timely basis, you could run into some problems really quickly. That takes us directly into risk management. How do you manage your risk profile? If you're doing commodity hedging, that's very complicated. Do we have the right resources? Do we have the right tools? All these things relate to the visibility of the transactions and the right levels of visibility. That takes us obviously into our bank relationships. Who is our trusted advisor in the bank? Are the banks working for you, or are you working for the banks? And then don't forget about the accounting. All the underlying treasury functions is underpinned by the correct accounting, strategic accounting decisions. How are we going to, as a company, going to ensure that the accounting is correct, it's done timely, and the right level of executives have the right visibility to make sure they're making the right decisions on a timely basis. John, I just want to bring you in here for this one because this is so important as we move into the treasury space. Any thoughts on this?
Yeah, Julio, absolutely. You and I have had a number of discussions with various treasurers of Fortune 500 companies over the past few weeks. And this is an issue that comes up particularly in both the timeliness and the resource aspects. Timeliness being, we hear consistently companies going through reconciliation processes and cash management processes where they don't really know their cash position. They don't understand where they are because of the latency from the banks. So talking about your bank relationships and understanding your current cash position. What have I paid? What has been paid? When am I paying that? And how can I forecast that? So that's one thing we hear all the time. The other one, of course, is risk. And risk is not, a lot of people talk about minimizing risk, Julio, and I think it's more about managing to your comfort or managing to your risk tolerance. Many different companies have different levels of risk tolerance, not only by industry or company, but by asset type or by commodity type. So these are all things that need to be integrated, and we see consistently all of this as being, one focus area for everybody. So absolutely. And then of course, you and I both know that we've seen more people get in trouble for either bad hedging or failure to report accurately your assets and manage cash. So absolutely.
Definitely. So that takes us to the next slide, which is really, how does the SAP Treasury TRM fit into the digital enterprise? I'll let us turn this over to Sarah and John, and they will take us through from a SAP perspective. How does that work? Sarah?
Yes, thank you, Julio. So, as SAP has been working on their digital business framework, really helping their customers kind of get through this journey into the digital economy, they've brought in an end-to-end treasury functionality within S4. So, what you'll see within the digital core are the treasury functionalities. And a lot of the issues that customers have been facing, like Julio just mentioned on the last side, kind of break down into these 4 different areas around payments, cash and liquidity management, the corporate to bank communication, as well as transaction management and financial risks. So within the treasury space, these central functionalities are really integrated with these different capabilities. So we've got the ability to integrate cash flow for relevant data, forecasting your cash into the central treasury application. We've got the ability to bring in connectivities to the banks, so the outsourced systems or outside systems. In many cases, a lot of the payment operations are fully centralized today, so it allows for you to bring those in. We can see that it's integrated into Bloomberg, other web services that are out there. You've got the SAP Trade Repository, so you can have that full extension that allows you the benefits of allowing you to report your trade derivatives, as well as bringing in any plan to covers or any futures as well. So there's a full suite of applications that are allowed embedded within the core, as well as the cloud connectivities to outside resources, giving you that full suite under the Treasury box. John, would you like to add anything here?
Yeah, at our last webinar, we talked a lot about some of these spaces, and I think the strategy here is spot on. Sarah hit the nail on the head. SAP's strategy is to provide you a digital core enabled by S/4HANA that allows you to integrate, knowing that companies use a lot of different platforms, but are looking for a core solution. We talked Tuesday about machine learning. Today, we're going to focus heavily on the integrated cash management. So, great job. Okay.
Thank you, John. So what is the definition of cash management? So we've just given you an overview of treasury. Now we're going to go into the deep dive into cash management, everybody's favorite topic. It's really effective planning, monitoring, and management of near liquid resources. What does that include? How do you manage your day-to-day cash balances, especially in a multinational environment, or if you operate in multi-state environment in the United States? You have to have that visibility and transparency of your cash balances. Why is that important? Because obviously, if you can't pay your bills because you think you have a certain amount of funds in your account and hasn't cleared yet, and you get a bad check, well, customers, employees, they definitely don't like those things. So that's one of the key things of managing your daily cash balances. How much money you have in the bank. You have your receipts going out, you have your payments going out, your receipts coming in, and then that is layered into your short-term and investments and borrowing. So some companies prefer to use short-term borrowing facilities with higher interest rates, or some people go into long-term facilities with longer interest rates. It just depends on what your treasury cash management strategy is. So we talked about the definition. Now let's talk about what should a company's objectives be as far as cash management. Obviously, as John would probably know this, we just spoke about this 5 minutes ago, is you want to maximize the value on your incoming funds. You want to maximize the return on excess funds. So if I have a float, if I have additional funds, I should have a strategy of, if I have a 30-day outlook, a 60-day outlook, a 12-month outlook, what am I going to do with my excess funds while I'm not investing it in capital, plant, property, equipment, and those sort of things? The next thing is, obviously, we want to have an integrated banking facility. What does that mean? It means that you have your banks, you have your information, you want to make sure that that's integrated into your ERP system. Why? That's going to give you visibility, it's going to give you transparency, but more importantly, it's going to give you, as the next bullet says, the ability to process information quickly and accurately. And in the last one, I like to talk about this because it says, you move it, you manipulate it, you report it, and you transmit it. That's how the flowing of funds is going on at all times in an organization. So if you think about this at a granular level, what does actually cash management actually mean to an organization? Well, you're performing your daily cash settlement activities. So you're monitoring your cash balances, you're monitoring your inflows and outflows, and you're reviewing and approving wire transfers. Obviously, cash comes in from a multitude of locations. You have your lockbox, you have your checks, you have your cash coming in. And we're going to talk a little bit about that cash management app that SAP has a little later in the presentation. Next part of cash management is obviously how do you manage your bank accounts? You're centralizing your administration of your maintenance activities, and you're monitoring your listing of accounts and authorized signatories on your accounts. That's very important for Sarbanes-Oxley because you want to make sure you have proper segregation of duties. The person who is signing the check hopefully is not the same person who authorized the spend. That's a no-no in the Sarbanes-Oxley world. And lastly, we're talking about how you manage your short-term investments. What is your plan to invest excess cash on a daily basis? A lot of companies I'm familiar with, they use overnight sweeps. So what does that mean? That means that whatever excess cash is in at 6 p.m. on a workday, it goes overnight into the banking system, and the next day it comes back into your account, and you earn, a couple points of interest, which is always nice. And then obviously, as you mature and your business changes, you want to make sure that you're always assessing alternatives. Is the long-term financing the best strategy for me? Do I use a short-term strategy? And what types of investments am I doing? Am I doing treasuries? Am I doing bonds? Am I doing bills? There's so many options, and that's where the banking strategy comes into play.
Right.
Here we have what I like to call the cash management pyramid. So this is a pyramid that starts at the bottom, which is basically you have your bank accounts in various currencies, especially for multinational. This is actually how you make a cash management decision. So on your basic fundamental, you have all the bank accounts. I mean, we were talking to a company last week. They have 1,500 bank accounts worldwide. In each country, there are at least 3 different accounts, one for investing, one for operations, one for payroll. Imagine that times 10 or 50 if you're in different countries. The next part of the pyramid is the payment transactions. You have outgoing payments in transit, you have incoming payments. Then layered upon that, you have your financial investments and borrowings. On top of that, you would have your accounting information. Remember, you have your subledgers, you have your accounts receivable, accounts payable. What's in those? You have your booking your sales orders as the sales guys go out and book orders. And then you have your orders going in for your purchase orders. That's going to turn into inflows and outflows of cash. That takes you, all those 4 below, into your cash position, your overall cash position. This is why when we talk about cash management, it's all about visibility. It's all about transparency. Your cash position is going to take you into your liquidity forecast. When you start talking about liquidity forecast, you start talking about working capital. Okay, so John and I like to talk about it, right? So customers always want to collect in 30 days, and they want to delay payments to their vendors 90 days, 180 days, depending on your situation. All that liquidity forecast now, you layer that into your market information. What are the macroeconomic environments affecting? In the United States right now, we have very low rates. So therefore, does it make sense to put my money into short-term treasuries? It's very safe, but the return is very low. All those pieces of the pyramid makes me decide what is my cash management decision for my optimal strategy for my company. Once you have that decision, the last step is I execute that trade. So this is a nice pyramid where you kind of go through, you build levels upon levels of what is the starting point, your bank accounts, and you build levels, your accounts payable, accounts receivable. And the end decision is we make a decision to trade. We're going to buy treasuries. We're going to go with some liquid investments. We're going to buy short-term bills, markets, all these things. So it's a very nice graphic. John, anything you want to add on this one?
No, Julio, I think this is well, yes, but I think this is a fantastic visual. I think it shows people the way everything builds into the eventual cash management decision. And I agree with you. It's 100%, I think, folks, about two things. One is making sure that you have the cash ready at the right time to make the payments required and getting the optimal return on your investment. As Julio and I like to say, it's getting your cash to work for you and not your bank. And what we're seeing is increasing companies using these tools and this process to look at a couple of different areas, which includes, companies with large cash positions in low return areas. Let's say, Julio, for example, you mentioned, the U.S. If you're a company that has large cash position in the U.S. and you have operations in a country like, let's say, Venezuela, where the interest rates are spectacular, you may decide to do an intercompany loan that increases your return on investment, helps you secure the risk levels that you're willing to encounter or use, and optimize how the money works for you, as opposed to putting it in a bank and letting it sit there and let the banks make the money for you. The other trends we're seeing are things like cash pooling, so bringing cash into certain areas with tax implications, with liquidity, so making sure you can move your money around appropriately. And the third one is what we're hearing about is COBO and POBO, which is collections on behalf of and payments on behalf of, because it allows you to manage this liquidity forecasting. So imagine that you pool all of your payments into a German subsidiary for major EU companies because you get a better return on your investment, or you have a better relationship with your banks in that region. A lot of companies are doing that to help maximize that. So I think we'll see a little bit about the insights that are crucial going forward. So, Julio.
Yes, John, thank you very much. That's very good. And I love the Venezuela example, considering what's going on in the country right now.
Yeah.
Anyway, so let's talk about some cash management objectives, again, at a granular level. So once you have a centralized administrative treasury and accounting function, what does that mean? That means that all your distribution, your invoicing, your receivables, your payables, all that is on a unified platform. So what Sarah and John showed us in the SAP roadmap of the treasury function from an SAP perspective is exactly that. You have all your decision-making tools that are going to be necessary for you to make the optimal decision. And then that takes us obviously into what is the optimal number of bank accounts that you should have. As we said, we were in a call last week with a treasurer from a large European company, and he was trying to reduce his number of bank accounts from 2,500 to 1,500. And 1,500 sounds like a lot, but for him, reducing it 1,000 accounts was a big achievement, and they were trying to get it down to 500. So I think we're going to talk about that a little bit again as well. So this one I really like to talk about because I think John will appreciate this slide as well. So if you think about this from any company's perspective, is you collect funds on the left side, which is your customers. You track your transactions, you track your balances, and on the right side is you have to pay your vendors, you have to pay your employees. And then on the bottom side is really you manage your funds and how you manage your shortfall, your excess. So if you have a shortfall for 1 month, you probably have to go into your reserves, into your savings. So it's really a cyclical flow of funds, and if I could just give a shameless plug for the Bramasol model, is that we always like to say that on the left side, we do revenue recognition, which is how do a company recognize revenue, collects funds. We also do ASC 842, lease accounting, asset management. That's the disbursed funds side. And in the middle of it all is the treasury function. So they all go hand in hand, collect funds, disburse funds, and then how you manage the funds in the middle is the shortfall excess. John, I know you want to add something to this one.
Yeah, Julio, I think you said it spot on. It's all about managing all of that, and it's also about the implications and the visibility. So using tools like revenue accounting and reporting, the SAP RevRec solution, or CLM, and having those integrated gives you a really optimal way of looking at, for example, as Julio said, forecasting when you can expect cash to come in based on RevRec. But then also on the disbursement of funds, you have a centralized tool like CLM that allows you to forecast your lease payments, but also make some lease buy decisions, gather all of your information together. We talked about optimizing your bank accounts. Here's another example of if you know what all your leases are, and you can see that I have 50 different leases with the same bank, Citibank, and they're all at different rates for different terms. That helps you optimize and balance all of that. So absolutely, I love this graphic.
Thank you. Okay, so moving on. So obviously, what are the benefits of good cash management? Well, I think we spoke about a lot of it in the last couple of slides, but you have better control of your financial risk. John spoke a lot about if you have a lot of commodities risk, foreign currency hedges, how you manage your risk. Then you have an opportunity for profit. If you have a large amount of cash sitting in the US, as John correctly said, if you move that overseas, maybe you can get a better return. The rates are very low in the US. You strengthen your balance sheet. Working capital is of critical importance, and you find a lot of the Fortune 500 companies, they start compensating the CEOs and executives based on working capital strategies. So it's not just about how much revenue you can bring in, but how fast can you convert that revenue into cash in the bank? A lot of metrics are being put around those type of metrics now. And obviously, if you can manage your cash well, you don't have to get calls from your suppliers saying, where's my payment? Or customers saying, well, what is the strategy here? So I think you have a lot of benefits from that perspective if you have good cash management. Then, people always ask us, well, what's the best structure? How should I structure my cash management environment? Well, unfortunately, answer is it depends. What type of business are you in? Are you in manufacturing? Are you in retail? Are you in service? What type of markets are you in? Are you domestic, international? Depending on the industry, going back to the first one, if you have a lot of capital investments, it's going to need probably the need for long-term capital financing arrangements. As opposed to if you're online provider, a lot of companies like to use short-term facilities. If you're doing domestic and international, if you're in an international space, guess what? Foreign currency hedges may come into play. Who is your customer base? If you have third-party customers, well, they want probably cash on demand. If you have intercompany, you can write an intercompany due to, due from. So maybe the need for cash is not so critical. What types of products you offered? And obviously, if you have the types of receivables and payables you have is very dependent upon. So what is the best fit? It really depends. And, we like to sit with our customers and devise a optimal strategy from that perspective.
Yeah, and I would also add to that real quick, Julio, that based on that industry, it's based on the nature of your industry. And we all like to think of cash flow like a hose or blood. But at the same time, that blood flow or that flow could be vastly different. For example, if you're a project-based business like GE Energy, or you make large buildings, your cash flow is going to be vastly different because you're not receiving ongoing cash, you're receiving cash in big lumps, which you are then dispersing over time. So you need to manage that cash. However, somebody like Amazon or some of our customers in the retail and SaaS areas have a different model where they're constantly collecting cash, but they're dispersing cash quickly as well. So it's very much a different management style, risk management. So obviously visibility is crucial here.
Yeah. Thank you, John. That's a great point. Yep. So this one is just as going back to the best structures. I mean, on the left side or right side, there's a number of options. And again, what we like to do, because one size does not fit all, is really understand as John correctly said, what are your needs? What type of business do you have? And depending on what type of business you had, what are your cash needs? Then that would be a recommendation of, do you need cash more often? Do you do EFTs? What type of international payments are you doing? A lot of companies like to use credit cards to do financing. It just depends on the strategy of the organization. And again, we just like to come in and listen to your needs, and then we recommend an optimal strategy. Now, we're very fortunate that Sarah is actually going to take us through an SAP cash management demo. Sarah?
Thank you, Julio.
Sorry, you should have presenter rights.
Yep.
There you go.
Perfect. All right, so this is going to look a little similar to if you guys were on our last cash management demo. This first piece is going to look pretty similar. I want to start by kind of going through some of what John and Julio have talked about. So we want to see our cash position. Within SAP S/4HANA, you're able to integrate and have that full 360-degree view of all of your bank accounts. So with that, I'm able to really see my full cash position at any point in time. So where does my money lie? Where does, what accounts is it in? Can I move it? What can I do with it? By using the cash position app, I can actually come in, and I've got a few different ways I want to filter. So I can filter by currency. I can view different bank countries that I'm in. So I can see all the different countries, the US, Germany, Australia, the UK. I can actually filter down and view this graph in a few different ways. I'm going to keep it by bank country and actually drill into just the US. So if I want to see all the banks that I have in the US or all the companies by bank and currency, I can view all of these here. And I'm just simply able to drill down to the next level of detail. Well, in the US alone, I've got accounts at Bank of America, I've got Citibank, Wells Fargo, and I actually get to see today where all of my money in the US resides. If I wanted to change this, right now we're looking in just Euro. Let's go ahead and actually change this to USD to make a little bit more sense since we're looking at US accounts. And I can see my US cash position for Bank of America. Well, I've got about 600 million in B of A, but I actually plan on making some payments out of my Citibank account. There's got to be a way to transfer the money without having to back out of SAP, go in and log into my B of A account, make that transfer. I want to be able to start that process 100% residing within SAP. So you can come in and we can see that we've got our cash flow analyzer. I can manage my bank accounts. I can do all kinds of things, but I actually want to see where all my cash flow is. What have we received up to date in multiple currencies? I can actually view. So my group currency, I can see it in pound, I can see it in US dollar. I can continue to kind of drill out. From here, I can see I've got my US company code, and within my US company code, I actually have 4 different accounts at Bank of America. I've got a lockbox, I've got my checking account, I've got my Europe account. So we can see we've got multiple accounts here, but it's also showing us what is our cash looking like for the next week to the future. What are all my total amounts that I see out there? If I wanted to drill into just my US checking account, I actually see money going in, money coming out, as well as my total position. So I can click on my position today, and I can actually make actionable transactions here. So I can go in and check the cash flow items that reside and make up this number. I can go in and make bank transfers. I can pull money in, I can push money out. So from this account, since we've got a very large amount of money in our Bank of America account and not so much in our Citi account, I'm going to transfer from this account. So what it's going to do is it's going to pull up a page that says, okay, so here's the bank transfers that we've seen already from this account. Here's new bank transfers that you want to check. So you can actually monitor and track in real time if there are any bank accounts or bank transfers that are already happening. What bank accounts are they going into? Where are we looking? And then I can make that new transaction here. So I can start by entering in my new target bank account. me search out there for this one. Here we go. So we'll be looking for our city bank account. We can see that here. We want to transfer the money today, and then we just enter in our amount that we would like. Let's say we've got 100,000. Our payment method that we want to use is going to be a bank transfer, so a credit transfer. And then we can enter in, the amount that we want to use. So 100,000 should cover our bonuses. In USD, you can create a reference text. So if you have any idea of, what we want to do, we want to say bank transfer.
Hey, Sarah, while you type that, I have a quick question, because somebody asked us on the last time we did this that you actually have the capability of doing this transfer within the bank itself, and you're updating your accounting records instantaneously, correct?
Correct.
Yeah, somebody didn't believe that this was going directly to the bank, and I said, yes, that's the power of S4.
Yes, so it has the connections. A lot of systems today, you have, one person that holds all the different bank keys and all the different logins to all the different banks. When you're setting up the bank account management within S/4HANA, you'll be obviously based off of authorizations and roles, who has access to these, but you're actually able to log into your banks directly from within SAP.
I think that is the most powerful piece of this information, because as you said, you usually have to go into it, come out into the bank. With this, it's doing it all for you instantaneously, the bank account balance in the GL, as well as the bank account itself.
Right. And the other thing, to your point, Julio, is because it's from SAP, you have all of the security that you need. So you're managing the SOX compliance as well, so that the person making these transfers, you have to get approvals. Everything in the workflows is required, all exists within SAP. So.
Yep.
Correct. Yep. So I'm going to go ahead and save this just for demo sakes. It does automatically reflect on my bank account. Just like what you said, though. So payment request was created. So I can pay it, I can release it, I can reverse it. Just like what you say on the workflows. So cash position is going to actually show our most up to date. So if I drill back, look at my banks. Hold this in here. The cash position is going to show as soon as you update your workflow. So I've got workflow here. It hasn't shown because I still have bank payments or approved bank payments that are out there. So this is going to go through a workflow. Someone has to approve over, you'll set up your parameters of, how much you can approve, send, what needs to be done. We've got some that are out there, some that still need approval, some that are new. So you'll be able to search across all the ones that are out there that require payments or the batch jobs that they have. So I know we've got a lot of slides left, Julio, so I'm actually going to transfer it back over to you.
Thank you. That was excellent, Sarah. I think the power of this is instantaneous information recording from both an accounting perspective as well as the bank perspective, all in tune in one transaction. That's the power of S4.
Right. And the beauty also is that as you're doing these transfers, if you were to make a transfer between a euro deposit and a dollar deposit, the foreign exchange rates that you have are the same foreign exchange rates that are in your SAP system for both your operational management and other accounting purposes. So that's great.
Yeah. So now we're moving on to accounts payable. Very critical portion of your cash management strategy. So let's do a deep dive into the AP function. What's the best fit for AP function, especially when you have domestic and international payments? I think in today's one world interface, everybody has some international exposure. So you always want that you have a centralized AP function. It's never a good thing when you have people doing disbursements outside of corporate without corporate knowing, and companies get into a lot of trouble with that because of a lot of companies have to manage their debt to leverage ratios, and it's very important how they do that. The next piece is really electronic payments are becoming the norm for domestic and international. You always want to have electronic payments because it gives you a proper flow of information coming back automatically. The next piece is really, you really want to have your company's AP and ERP system and its bank all connected into one. So what Sarah just showed us is a perfect example of that, because it shows how important it is to have an all-encompassing file that meets both internally as well as bank externally. So what are the potential benefits of centralizing a payables function? Well, you centralize all your domestic and international payables. Why is that? Because we talked about that already. You always want to build consistency and knowledge. Why is that important? Because accounts payable as well as receivables, it's all about transparency. Where are my payables? Who am I paying? How much money I have in my account? That's going to be very important to make sure you have proper working capital needs. The next piece is really, you want to make sure that all your incoming invoices are assembled into a bulk global payments file for your bank. Why is that important? Because even if I have a centralized AP processing in my GL system, if I have to piecemeal it into my banking system, it's going to take a lot of time. So we always want to have that 100% connectivity in the back end between my bank and my GL, which is exactly what SAP S4 scenarios will show, where you make an entry in SAP, it's talking to the bank, updating instantly, and it's also talking to your GL, updating instantly. That is exactly what you're looking for. So if you take a quick summary of why centralize your AP function, beyond all the risk, especially when you have multinationals and you are operating in 60 different countries, knowing who does what and who is paying what is critical. You want to always centralize your payables via one single bank if possible. I know that sounds sort of unrealistic, but actually in our conversations last week with a treasurer of a large company in the United States, his goal was to have one bank for all its transactions. Companies like Citibank that are in every country all over the world, very important. You always want to integrate your payables with a centralized processing. So it's not just about payables, it's about processing. So as you generate your accounts payable, how is it going out to your vendors? How are you paying it? It's critical. You want to obviously identify any hidden costs. So you want to make sure that you know the cost of each transaction on a transactional level. And now, obviously, as we just showed, what Sarah just showed is you want to have a single enterprise-wide operational account if possible. A lot of folks are using Bank of America, Citibank, especially Citibank, who is known for operations in basically every country that they do business in. And lastly, which is getting into the strategic analysis, is you always want to try and benchmark your bank's current offerings to industry standards. Why is that important? It's important because as you see what your bank is doing for you, as John likes to say, you want to make sure that there's no better deals out there. Some companies choose Citibank because they are in every country, but at the same time, maybe there are better benefits with a Bank of America or another bank. So you always want to benchmark your offerings to other benchmark companies. John, anything you want to add on that one?
No, I think you covered it.
Okay.
That was good.
Very good. Now, if you see this slide takes us back from our accounting automation on Tuesday. I wanted to bring this slide in today because it's very important, because we just talked about what are the benefits of having one AP processing system, of having a centralized AP function. But now let's talk about the incoming payments. Cash management is incoming payments, outgoing payments. So I want to give to Sarah and John about the SAP cash application receivables line item matching. And why is that important? Because that's going to help us collect and record payments coming in from our customers quickly. Sarah?
Yeah, so thanks, Julio. So what we're really looking at here is around within machine learning, the whole process, like Julio said, is to help automate the receivable matching. So if there's anything that's still unmatched, anything that takes place in the legacy bank statement process, it goes through what SAP uses, almost like a built-in training. So the machine learning is constantly training as it's going. So it's continually improving its process, improving itself to adapt to new rules as you go through. So things that take place over and over again or very repetitive, those are automatically going to flow through machine learning. You're going to have a history of everything and it's going to automatically match everything. As one-offs happen, as different scenarios take place, you create the outcome and the machine learns from what the users are actually doing. So it learns from, oh, this is how this works. So in the future, if we see something similar to this, it's going to automatically able to flow through. You're going to see that matching process to overall kind of accelerate and improve the rates for the matching that takes place. John, do you want to add to that?
Yeah, sure. I think you did a great job of summarizing it. I think the interesting thing about machine learning is, and let's take this slide. I think this is a great way to do it.
I love this slide, John.
So I love this slide. If you think about this slide, do you want to take this slide, Julio?
No, you can continue, please. I know you like this one as well. Yeah.
No, I love this slide, and what it shows you is the process. And we had a lot of questions the other day and last week about this. So one of the big improvements this year has been the addition of lockbox. So really bringing in and looking at both your incoming and outgoing payments and the matching of that. Machine learning, let's define machine learning versus RPA, which is your robotic process automation. Think of RPA as just a set of rules that executes against those rules consistently time after time after time, and you have to adjust that. Machine learning is the kind of a tool that learns from what goes on. And if you think of your incoming payments, looking at your payments to your receivables and matching all of those, so it's this cash application. What do you know about the way that your customers pay? Do they consistently pay on a line item basis and you know what they're going to do? Do they consistently pay a lump sum versus a number of different invoices? Or do they consistently short pay? All of those go into the machine learning tool, and after 5,000 transactions, it begins to really begin to make recommendations. One of the questions that we get on a consistent basis is this idea of trust. And if you look at the way that the process works and flows from left to right, you have the incoming from the bank statements and lockbox, you have your incoming, outgoing. It looks at the different GL accounts, and then begins to make recommendations, identifies the account, does line match items, but makes recommendations. And you set the tolerances on those recommendations. Do you need 90% confidence, 75% confidence? And it uses an exceptions process. And the more that you put the information in, the more the machine learning tool is able to apply those appropriate rules. And it's really a great tool for that process.
Thank you very much, John. So now I'm very excited about this demo. I know we're running a little bit out of time, but this is a brand new demo. This is the actual SAP Bank Reconciliation demo. I wish this was here when I used to do bank reconciliations a long time ago, but Sarah, please take it away. This is a very exciting piece of the demo. Thank you. Sarah?
Yep. Let me know when you can see the screen.
We're good.
Beautiful. Okay. So I want to showcase kind of how we can, we're talking about rules, we're talking about machine learning, how the system does that. So when you first come in, you've got all of your bank statements. You've got the ability to manage bank statements that are in process, manage the ones that are out there. You've got the ability to manage any incoming files that may take place. I know there's a lot of electronic files that come in. I'm going to start by taking a look at our bank statements that we have today. So I've already filtered down. As my user, I really only want to look at the US. So it's already filtered onto the bank statements that we have within the US. I can come in and I can select on a bank statement that we may have that is out there. You can bring in information. You can create new bank statements. I can import on a bank statement that we may already have out there. So this has imported from somewhere that we have. You can bring in Excel files. So for example, if your bank accounts are sending you electronic statements, or if you've got bank statements or anything that may be in Excel, you can also import that as well. So I can come in, I can select the bank statement that I have, and it's going to pull in all the data. So we can see here we've got a couple, we've got 100, 200, so we've got multiple line items that we have here. Just going to remove a couple of duplicates. Perfect. Okay, so we've got the 100, the 200, and the 400. I'm going to go ahead and save on this value. So what this is doing is, this is really just telling us that we've got 3 line items that came in, but they haven't matched yet, or the system isn't aware of what to do with this process. So we can see that it has not been completed. So we can go in, we can see all of our bank statements here. We've saved them, and we can go ahead and post. So the statement has 0 completed, but 3 not completed items. So we've got our bank statement that has been done. We can go ahead and select those line items, select a reprocess on our bank statement. Let's go back to the one we had. We can see the
While
values.
you're doing the processing, I'll just say to the audience, it's a great time to be an accountant.
Yes. So select here and reprocess my bank statement items. So what this is actually doing is it's taking us into our items. We've got our bank statement here. It hasn't been processed. Well, we actually get to create a rule. So the system will start to learn as you're going through which rules need to be applied. You can select a rule, apply a rule, manage new rules that are out there. There's also the ability to post into a bank account or select on new rules. I'm actually going to just select and reprocess this bank statement. And I'm going to post it to the GL so that I'm going to teach the system what exactly we want to post this to. So we're going to take our $100 and we're going to post into a new GL account. For interest income. And then we can show that we've got the credit for 100 and go ahead and post. Oh, it's giving us notifications that we've got the green here and the red here telling us that there's still a cost object. So the system is always letting you know when you need to add more information into the system. So for example, this one requires a cost center. And then as soon as we enter the correct cost center, we're actually able to create the rule. So we've posted it, and now we're able to create a new rule for this process. Telling us that with these values, we actually want to make it between. So any posting between, let's say, 50 and 400, because we have that other value out there for 400, that they're going to all apply these same rules. So we've created a new rule telling us that any accounts that come in, we've got the profit centers, it's reprocessing the rule. The rule has been saved. So now we've got two other line items that came through on our process. So if we head back to our original payments, this one has now been processed for that 100, but we still have two more out there for 2 and 3 that have not. So we'll bring both of those in. We can reprocess here and actually just apply a rule, the rules that we've already created. And then the applied rules have been run for both of these, and then we can reprocess the whole contract or the whole bank statement. So once this is done one time, everything that has been updated from now going forward is going to apply these rules. So that you'd only have to do this once, and then going forward, every time that a contract comes through, we will see our bank statements have automatically processed this here. So we can see all of those are completed.
And of course, it makes recommendations, and you're able to see those so that you can verify. I mean, we talk about cash and the cash flow of your business. It's all about trust. And in this case, you've managed the transaction here, but trusting that it works is a process by which you look at it, evaluate, did it make the right decision, and help course correct. So this is great. Yeah. God, I wish my home checking account was that easy to do.
So I think, John, what we've seen here is really everything about what we talked about: machine learning, robotic process automation, everything that is why the power of S4 as you go into this, they can do your bank reconciliation for you automatically, which is a big change, a game changer in the accounting world. John, I'll take it from here. I guess you want to give us a little insights, and then we go from there.
Yep, we'll give a couple of insights and wrap up. We're running a little bit long, and I appreciate those of you, the 40 of you or so who have hung on there. So thank you for that. Really managing treasury with SAP S/4HANA is all about insights, automated actions, controlled outcomes, right? So it's number one about visibility. How do you really understand where you are and where you're going? And if we think about the idea of the number one most punishing thing on Wall Street, it's about missing guidance. It's about not having accurate forecasts. Integrated tools from SAP from a treasury perspective give you insights into and visibility into all of your cash, all of your investments, and do it in a way that gives you ongoing information that allows you to collaborate with stakeholders. You have automation. We talked about automation tools. So you saw straight through processing, you saw automated, whether it's a machine learning tool, an RPA, or any of the intelligent systems that integrate externally. That includes your Reuters systems, your trading platforms like Deutsche Börse, or others that you might use for your commodities trading, hedging. And finally, really talking about maintaining integrity and compliance. So much of this is about, when people touch cash and deal with cash, you want to make sure that you're following all the right rules, that you are managing that cash tightly so that people are not disappearing with your cash, or you're not sending cash to the wrong place. So it's all about that process, and then managing to SOX, also managing to things like foreign corrupt practices or global trade services, all also integrated into these functions so that you ensure that you're complying with not just good financial practices, but legal practices. So really tying it all together, it's all about integration with operating systems. It's about the integration between your financials, your logistics, your treasury, but everything from soup to nuts. You're supporting electronic banking functions to allow you to do things real time. We talked today a lot about cash position. Julio and I have heard time and time again from treasurers and people in the treasury function about the importance of understanding daily bank account balances. But in some cases, when you're doing huge transactions on a regular basis, it's hourly. And by using a tool like SAP's Banking Communication Manager, you have insights on a regular basis into both the collections and the disbursements on a real-time basis. Really about forecasting, and at the end of the day, liquidity forecasting, understanding the future inflows, outflows, and managing your cash so you optimize your return on investment. Julio? I want to thank everybody. I want to thank Julio and Sara for just another fantastic webinar. Hopefully everybody got a lot of great insights. I thank everybody who hung in there to the end here. Come check us out again on our website. We have a lot of great new stuff coming. I encourage all of you, please come visit us at Sapphire if you're able to come. We will be showing a lot of these new treasury functions and give you a kind of an end-to-end view. So thanks everybody. Have a terrific day, and thank you again for spending time with us.